Asha's screen now? Okay, great. Thanks, Leland. Perfect. Welcome, everyone. Welcome to Crush the Private Equity Technical Interview. I think this is probably the highest demand session just in terms of the technical expertise you'll leave with. Asha is incredible at what she does. She's one of our top coaches, obviously very experienced at her craft. So we're happy to have her here. If you haven't had a moment to already, make sure to sign up for Leland. If this is your second, third, fourth, fifth session of Finance Week, we know we sound repetitive, but super necessary to sign up. That's the only way you'll be able to access recordings and other communications we have around finance resources and everything else we're giving away as part of this week. Next slide, please, Asha. Quick rundown. Tomorrow is our final day, but today we have this session and then a PE/VC office hours. So that'll be a great place to hop on. You can ask questions. It's only 30 minutes and we have a private equity coach and then a VC coach coming on. It's kind of like AMA style. You'll be able to go into breakout rooms. So make sure to join that. And then tomorrow, if you haven't already, to sign up for our sessions. We have a FP&A session, public market section, as well as a wealth and asset management. On the next slide there, we just want to do a quick introduction. Asha, if you want to present yourself, and then we'll do the quick Leland overview and then back to you for your workshop.
Sure. Yeah. Thanks everyone for joining. So really quick intro on me. I'm from the UK, grew up in London, went to LSE for undergrad, then went into investment banking. I spent 5 years in banking, mostly at JP Morgan doing M&A, and moved to the US in 2019 for my MBA at HBS. Graduated in 2021 and pivoted to private equity, joining Apax as a senior associate. And now I help people like you break into PE and spend most of my time coaching.
Awesome. Thanks so much. And again, she is our star player this evening. Super excited to have her here. As a reminder, again, if you have been to sessions before Finance Week, we don't want to be too repetitive, but on the next slide there, we'll just do a quick Leland overview. We obviously help people be successful. So if you're someone who wants to get into PE, which is why I assume you're here this evening, or starting out with banking or another sort of investing role or grad school, we are here to help and support. On the next slide there, just kind of tactically gives you the services we offer. So one-on-one coaching like Asha does on the platform. She has tons of clients that come in. They get support on things like LBO modeling or their story or behavioral prep, even just like getting in the door. And so that's what she does, as well as over 500 other coaches available for services. We also have group classes and content as well. So if you haven't already, that's why we've been plugging signing up for the platform, because that's how you'll tap into the content we share out, our new classes, our coach highlights, and everything in between. So with that, I will pass it to you, Asha, to do your workshop, and hope everyone here gets a ton of value out of it this evening. Thanks for joining in.
Great, of course. So I'm going to get started on the technical prep. My plan is we've got about an hour together. So I want to spend about 30 to 40 minutes really walking you through some of the technical prep and also a really quick paper LBO. I'm assuming that a lot of you don't have a lot of technical prep under your belt already. So this is going to be much simpler. But as always, ask me any questions. Feel free to drop any question that you have in the chat and I'll try to get to it. And then I will leave quite a lot of time at the end to basically do a shorter version of the Ask Me Anything and go through any specific questions that you might have on your technical prep. So to get started, for your technical prep in private equity, there are 4 key areas that I work with people on and that I suggest you spend time working on. I've laid them out here. The first one is obviously the paper LBO. So this is something that you will come across normally in the first couple of rounds with a private equity fund, where you will be expected to build an LBO from essentially scratch, but a much more simplified version. Well, you'll be given assumptions and you will be required to talk through how you're building a paper LBO, as the name says, essentially with a pen and paper. So you don't have Excel. This is where you show your mentor arithmetic skills. You talk people through exactly that you understand the basic mechanics of how private equity investors generate returns. The second one is a model test and case studies. So SIMs are confidential information memorandums for those who don't know. And that's essentially when you will get a pack on a company that you can take a look at and review and really go through whether or not this is, you would invest. Model tests and case studies are normally seen in kind of the round before the final round. This is where most people struggle to get past, but also this is the part where on the PE side, we filter the most people. So when I was interviewing people for associate roles at Apax, we would see that a lot of people, this is where they stumbled, either because they hadn't practiced it before, they came from non-traditional backgrounds, or it was just something new to them. So we really wanted to use this as a tool to make sure that we were selecting the best possible candidates. The third thing that often comes up is consulting style case studies. This is very much fund dependent, and it really comes in, I'll say third round or later, but this is really about, can you think through a business model? Can you think through an industry, maybe one that you're not necessarily familiar with? And can you think through how they make money, how the company operates, what its business model is, etc. So consulting style case studies, again, it's just about practicing them. It's about thinking through, okay, how do I structure my response? What do I spend more time on? What do I focus less on? And what do I make sure I communicate as I'm working my way through the case study? The last thing that comes up often is the technical interview questions. And there's no set kind of part of the interview process that this might come up, but this comes up throughout. So you would get some technical questions in the first round, you will get some technical questions when you're doing the model or case study debrief, and then you will get technical questions all the way up to the final round. The point of the technical interview questions is really to understand whether you have solid, basic, fundamental knowledge of finance. So again, this comes back to model tests where people often practice a ton of tests so they get to know the mechanics of the model really, really well, but then they don't really understand why they're doing certain things in the model. Like they don't understand why the source and uses have to be done a certain way, or what does it mean to have rollover equity in an LBO model. So again, this is really just coming up on something. All four of these are really all about practice. And this is why I recommend when you're starting off thinking about PE, you really, really want to invest in technical prep, because that can often be the part that takes the longest to get up to speed on, especially if you don't necessarily come from a technical IB background. And often, even if you do, because in IB, in my experience, it's very rare for you to be building models from scratch, and it's very rare for you to be building LBOs often. Okay, moving on. So the focus areas for technical prep. So here is my suggestion on when you're thinking through your technical prep and you're starting out. The first one is to research your fund's approach. So this is why I work with candidates to really figure out what kind of technical interview format you might come across, depending on the type of funds that you're targeting. Often, if people are casting a wide net, you might see multiple types of technical approaches that I just covered on the previous slide, or a combination of all of them. So that means you have to get everything up to scratch. But for example, you might be coming from a consulting background and targeting funds that specifically look or prefer to hire consultants. In that case, you can normally just focus on, for example, consulting case studies with potentially a model interview test, but it's really fund dependent. This is also a section where it is really important to have a good relationship with your headhunter. So again, something I work with people, work with candidates on, but how to communicate with your headhunter, which questions to ask, when to ask those questions, so that you can be as well prepared as possible when you're going into second, third, and fourth rounds of the interview process. Then my second point is practice the most difficult models and questions. So I often work with people who come to work with me and are about to start the interview process, or they're already in interview process and maybe their previous rounds haven't gone so well and now they're utilizing a coach. And I often find that when I start digging into what they've been practicing with, they've been taking it easy on themselves. Okay. And sometimes they've been using models which are essentially very simple or are very straightforward, and they think that they're well prepared. My approach to coaching and my approach to getting you ready on the for your private equity interviews is essentially putting you through the pain up front. So you spend a lot of time working on the hardest models, really thinking through really complicated parts of adjustments, etc., so that when you go into the actual interview, it's easy. It's easy because you've done all the hard stuff. So that is when they question you, you know a lot more than you actually get quizzed or asked about. Okay. The same goes for technical questions as it does for difficult models. You should practice tough technical questions. People think that sometimes that the most technical questions that they're going to get asked are really going to be around, I don't know, like, how does an investor create value, or walk me through the parts of an LBO. And that's not always the case. So you will sometimes find that people go a lot deeper into your model, or they want you to think what they call second or third order thinking. And you can only do that if you've been used to practicing really tough technical questions. The last thing, and if you joined my session yesterday, you might have heard me say this as well, you've got to plan ahead. Okay. I'm working with somebody right now, and she's super smart and absolutely fantastic, but we're just working on a really tight timeline to our interview. And like I mentioned, tech interview prep is kind of the long pole in the tent. It's the one that takes the longest to prepare for. And as a result, is the one that you really have to think through and make sure that you can get there. Okay. And as a result, start it early. So if you're thinking about, for example, on-cycle recruiting, which normally happens in the fall, sometimes it even happens in the summer, you need to start now. Or at the latest, you need to start January. Because by the time the interviews roll around, you've got to be solid at it. Okay? Let's keep going. So getting started. So we covered a couple of these earlier, but I just want to reiterate the 3 parts of how you should get started and what order I recommend preparing in. So the first thing I always say is get a fundamental understanding of finance. So when I work with people, the first thing we do before anything else is a full LBO walkthrough. So not building one, but just understanding one. So I take you through the entire LBO and think through, okay, here are the different parts, and can you think through why we're doing certain parts of certain mechanics a certain way, why we're doing certain adjustments, the formula, etc., a certain way. It just helps you make sure that you have a solid grounding so that when you're doing anything else, you're able to support your responses using the evidence. Okay. Then the second thing I suggest you start with are paper LBOs and technical questions. Once you've got that fundamental understanding of finance, you can then graduate to actually building the models yourself. And it's easier to start with the paper LBOs, where you can start building on your intuitive thinking and the technical questions that come with that before you do a fully fledged model. The last thing that I recommend spending time on are LBO model tests and case studies. And here, what I really want you to do is practice building full LBO models without a template and doing some write-ups. And it's not enough just to build it and go through it yourself. It is really important to do mock interviews for this. So the time that I invest the longest when I'm working with someone is on the third part. So really thinking through, not only are you able to build the model and go through the case study, but are you able to do the debriefs? Are you able to do the discussion, post your model and sim, and talk me through your thinking? Talk me through why you wanted to make that investment, or why did you not want to make that investment? And what are the supporting pieces of evidence you have there? Okay, so we're keeping it simple, But what is an LBO? An LBO is essentially used to evaluate a majority buyout of a target company by a sponsor fund. And the analysis projects the returns essentially of potential investment based on whatever inputs or assumptions either you have been given or you come up with yourself. And there are a few things that depend on what the output you get is: the company's valuation, its forecasted financials, and the deal transaction structure. So when I say the company's valuation, essentially I'm saying, what are you willing to pay for the company? Is forecasted financials, that's obvious, like how is the company expected to perform, but not just in the base case, but how can you help improve the performance of the company over that time? And the last thing is the deal transaction structure. So how you're funding in your LBO, okay? Although it is difficult to have a typical LBO in practice, so when you actually get your PE job, you will see that every LBO you build is pretty different, okay? But for the purposes of your recruiting process, an LBO has a few standard components that you can go through, work through, and understand better to really be successful. So the final slide, final couple of slides I have is how do PE investors create value? So the three ways that you should think through is EBITDA growth, multiple expansion, and debt paydown. And this is just really around what are PE investors doing post the transaction to then get a return at the point at which they exit the company. The most basic one, obviously, is EBITDA growth, which means that they're either increasing the top line, so you're increasing the revenue, or you're improving the margin of the company. The second one is multiple expansion. So what do you pay for the company at entry versus what do you think you can get for the company when you exit? And the last one is debt paydown. So increasing the value of your equity by paying down the debt using existing cash flows. Okay, I'm going to really quickly cover this, but here's a basic overview of the components of an LBO and how you should structure it. Whenever you build an LBO model, you have always got to start with the entry and exit valuations and structure. So what the valuation is and how it is allocated between different holders. So that basically means that what are you paying for the, what are you paying for the company at entry? And then what do you get at exit? And your exit valuation obviously depends on who else is getting paid at exit. Is there a management option version, which means that your point exit is going to be a lot less. Okay. And then the second thing is leverage assumptions and sources and uses. This is much more around, okay, how are you going to fund your LBO? How are you going to fund all the different components of purchase price or transaction fees or financing fees that you need to pay for in order to buy the company? And then the final thing is a three-statement model. Once you have the first two, then you can move on to actually building your LBO, starting with the income statement, then doing the balance sheet and cash flows to get to your returns. Okay, so that is all I have on the slides. I'm going to stop sharing for a second, but I don't know if the chat is now open, but if anybody has any questions, feel free to drop them in the chat. If you have anything specific that you would like me to go deeper into, and we can cover that before I switch over to just walking you really quickly through an actual LBO. Hey, Eric, I see your hand up. Go for it.
Thank you. Thank you very much. I just had a quick brief question, kind of like how to think about junior year recruiting. So kind of to give a quick background, I'm currently a sophomore and I'm studying like finance with minor in philosophy at Virginia Tech. And this next summer, I'm going to Evercore for equity research. What would you say was kind of like how you would think about like recruiting to like
Eric,
then
sorry,
get, like
I can't hear you that well. I don't know if you can speak louder or
Yeah,
I have the
can
microphones.
you hear me better now?
Yes, I can. Go for it.
Okay, yeah, sorry. I was just kind of wondering, like, what would you, I'm currently a sophomore, and like this summer I'm going to be doing equity research. How would you kind of think about going to like a buy side seat from equity research, and then like, I guess like recruiting for like junior and then senior year?
Okay, so let me just make sure I answer your question. So you were talking about moving from equity research to PE.
Oh, yes.
Okay, so the way I would recommend it is equity research, you build up a lot of the same fundamental technical knowledge that you would in investment banking. You know, you're still building models for companies. The only difference is that normally in equity research, obviously looking at public companies, and you very rarely come across private companies. While LBOs, as I'm sure you know, and most of the actual evaluation of companies we do are specifically for private companies. So the biggest thing I would say that you need to reflect on are, can you look at private companies? Can you evaluate private companies? Can you think through that the type of data that you're going to get access to is going to be very, very different for a private company versus a public company? And in the interview process, that's what you got to be prepared for. I also think if you want to make it easier on yourself, it is definitely easier to switch to IB first, the M&A side, and then make the switch, because then you essentially become a traditional applicant. And once you're a traditional applicant, then you're just part of the headhunter funnel. So it becomes a lot easier to have that conversation and really, make the switch. But you can still do it from equity research. It's just about how you tell your story and how you market yourself, and whether you're just well prepared from a technical perspective to talk about private companies and LBOs specifically.
Awesome, thank you.
Of course. Any other questions, pop them in the chat. In the meantime, I will switch over to the model so we can quickly walk through it. Okay, so here is a simple LBO model that we will take a look at. And essentially everything in blue are the assumptions that were given at the start of this. So you have sponsor and you have a target. So this is just, a dummy names, XYZ Equity Partners, that is acquiring ABC Target Co. And the assumptions that you're given are NTM EBITDA entry multiple, your debt to equity ratio, and your weighted average interest rate on debt. So the way that this works is you always, like I mentioned, start with the sources and uses, where you're focusing on, okay, how much do I need to pay? And how am I going to fund the amount that I need to pay? So in this case, we start with the purchase price, which we know that you're entering at 5 times and you're given the EBITDA. Because the one thing that I want everyone to understand is that when you're given the multiple, the first thing you need to think through is, am I being given an LTM multiple, an NTM multiple, a 2023 multiple? Because that dictates which EBITDA or which metric you essentially apply to. So in this case, you're given an NTM multiple, and here you enter in at the end of year 0. So your NTM EBITDA is that 40 million. So you have a purchase price, which is then just that 5 times the 40 million. So it gives you 200 in the purchase price for that company, ABC Target Code that you are buying. Then you know that you have to purchase it for 200. You need to figure out how you're going to fund that 200. So you can split it with debt and equity. And you're told that the debt to equity ratio is 60 to 40. So in this case, you know that 60% of the total amount that you need is going to be debt. And the remainder, which is just a plug, is going to be 80. Then you build your income statement where you're given the assumption. So you're given that revenue is 10% and it grows year on year from 100. EBITDA margins 40% and it grows it stays constant. And then you're given your other cash flow assumptions. So you're given your DNA, your net working capital, and your CapEx to enable you to first get to your net income on the income statement. And then the cash flow, you can start from net income down to your free cash flow, which is your levered free cash flow, because it's post interest. The final part of the LBO model is always the exit multiple multiplied by the EBITDA. And again, we're trying to be conscious of the type of multiple we are using. So here's 5x NTM. So you have to apply it to the NTM EBITDA to get to the exit TEV. And because this is a simplified paper LBO, you will normally say that you normally see in a paper LBO that people say, assume that all the debt pay down happens at exit. When people say that all the debt pay down happens at exit, essentially what it means is that the cumulative cash flows are applied at exit. And as a result, you end up with the equity value. Okay. And here you have the MOIC, which is just your exit value divided by your equity value, and the IRR. So this is a super simple LBO, but it's designed to, this is probably as complicated as a paper LBO will get, but it's really important to understand the mechanics and why you're doing certain parts, because that will be very similar to how your actual LBO model will be when you start doing model tests and case studies. Okay, that's all I have. If anybody has any questions, again, let me know now, or we can wrap up shortly, but feel free to send it in the chat or raise your hand or just come off mute and ask a question. Okay, first question. Could you talk me through an example SIM? So normally the way that you will receive a SIM would be a deck on the company. And the company deck would be really just about, here's what the company does, here are what the financials are, and here's where you get to in terms of, I know, the company performance or the company's product. And once you're given that deck, your responsibility would be to review it. Normally, you'll be given a deck with several hundred pages and nearly not enough time. But the whole point is that you're able to get through it, pick out what the important pieces of information are, and get to a point where you build your investment thesis. Okay, Bashar, I know you asked that question. Does that answer your question, or did you have anything else?
Yes, thanks so much for everything since the beginning, and also for that answer. I have a follow-up, and the follow-up is like, so I come from a consulting background, and I'm pretty new to this. So for the SIM, am I allowed to take my own model, or is that something that I have to build from scratch? Like, do we do any sort of intricate, valuation modeling? Because like the paper LBO was, and I sorry if I'm like, expanding on this question, but I've kind of taken a financial modeling class where, calculating the unlevered cash flow from like the statements itself is like a huge task. And so I'm not sure if in the interview we are required to do that or not.
Yeah, so it's going to be a little bit of an unhelpful answer, but it really depends on the fund, and it depends on the process, the title that you're applying for, what you are allowed or not allowed to do. So some funds will give you a template and ask you to fill it out. Other funds will tell you to start from scratch. It is very unlikely any fund allows you to use your own if it's a timed model test. The only situation in which you can use your own is if it's a take-home case study, i.e. you get anything from 2 to 5 days to do the case study and send it back. In that case, it's in your own time. You can use whatever template that you want to use to inform your assumption and how you build the model, but it really is just dependent on the fund and the process. If you're coming from a consulting background and you're applying for funds which specifically target consultants, some of them don't use model tests at all. So you will find that there's more of consulting case studies and SIMs where you're just talking through the company and they want to know how you think and what your investor judgment is. And they spend longer there than they really do on, okay, can you build an LBO from scratch?
Okay, thank you.
Okay, of course. Alexandros, do you want to go next?
Yeah, hi. I got a question about the paper LBO and the exit calculations. I'm just curious about the EV to equity value bridge there. Why are we adding cumulative cash flows back?
Yes. So let me just quickly share that again. So this is a different situation because this is a paper LBO, remember? So this is not looking at debt pay down in any kind of circularity. So all it's looking at is it's saying that, can you take cumulative cash flows? So here is just cumulative cash flows. And can you use that to pay down the debt at exit? Okay, so this is a very simplified way of looking at it, but it's essentially getting you from enterprise value to equity value, but by assuming that your debt is the same that you entered with, and then you pay that debt as much as you can using the cumulative cash flows. It's very simple. This is obviously definitely not how it works in real life or in a full model test, but this is how it works in a paper LBO situation.
Okay, so we just assume that all levered free cash flows go to debt payment, right?
Say it again, sorry.
So we're just assuming that all levered free cash flows go to debt payment, right? That's the assumption.
Exactly.
Okay, yeah, thank you.
So there's no kind of like time value of money concept or anything like that.
All right, thanks.
Got it. Okay, really quickly in the chat, I did not see that there was a takeover premium in the model. Isn't there usually one? So there can be a takeover premium at entry, and that normally depends on how they want you to do the entry assumptions. So for example, if the entry assumptions are based on share price and they're saying, hey, you have a share price of X dollars, normally a company would pay a premium on the share price at entry. So that could be in the case. In this case, we're starting with an entry multiple, and you're given what you are paying for the entry at entry with the entry multiple. So the entry multiple already incorporates the premium at the point at which you enter. I know, Thomas, you asked that. Does that answer your question, or do you have anything specific? Okay, I will assume that is it. Okay, moving on. Jose, am I saying your name correctly? I know you have your hand up.
Jose.
Go for it. Jose.
Yes. Do you know if the equity research industry tests you on LBOs and model tests?
Equity research, you mean in banking or in hedge funds?
Oh, more like hedge funds, investment management.
Yeah, so in hedge funds, again, it's very fund dependent how they test you and whether to do model tests and sims. So for example, they could spend much more time covering what are the stock ideas that you have. Okay, what are the public companies that you have an opinion on that you want to invest in or you don't want to invest in? So they will spend more time there. But again, it really depends on the fund and the team that you're interviewing for and the role that you're interviewing for, what kind of process they follow.
Right, that makes sense. Thank you very much.
Of course. The other question, I know, Vishal, you have one more. I just have one more in the chat. Let me get through that. What kind of specific technical prep should I take as a sophomore, willing to intern at a PE shop for my sophomore summer? I think that, so the good thing is if you're a sophomore, you're not expected to know anything coming into the PE fund. So it's really just about showing an interest. So you have to show whether or not you are genuinely interested in finance and you're genuinely interested in doing PE, and you have to know why. Okay, so we spend a lot of time thinking through, okay, if there's a certain part, I know if there's a certain part of PE that you really like, is there a certain type of fund that you want to target, when it makes sense to do that? Okay, so it's much more about, can you show that interest and can you show that basic understanding of finance? So really, do you understand what three-statement model is? Do you understand why PE investors invest in certain types of companies? Like, for example, why do they invest in companies that are profitable? Right? So you need to have that kind of basic understanding. I usually recommend that if you want to go into PE, you get some banking experience first, just because they usually do the training for you. So they will tell you and teach you almost everything you need in terms of fundamental finance concepts that are really helpful in PE. So that's what I usually recommend. Okay. Bishal, do you want to go next?
Thank you. So I have two questions. First, other than LBO, would you recommend any other kind of models that we practice, such as, let's say, M&A? And the second question is, do you have an example of something that's more on the complex side of the spectrum, just so that, you know, I get an idea of how intricate or complex could it get?
Yeah. I usually only recommend practicing LBOs because that's what most funds use. But if you want it to be more comprehensive, some funds say, hey, practice a DCF and understand how that works. If you're going into banking first, you obviously need to understand how an M&A merger model works instead. So that's normally the case, but in PE, it's almost exclusively LBOs that they test you on, that they would expect you to really, spend time working on. In terms of more complex model, I do have some that I work with people on, but I definitely wouldn't be able to explain to you in 10 minutes. But it's just think about, like, there's different dynamics that can make it more complicated. Something that has a management option, something that has an equity rollover. It's just small things, but once you build those in, things get more complicated. Whether you get a complex model or not really depends on how much time you have to do it. So if they tell you you have 90 minutes to do your model, most likely it's not going to be super complicated. But if you get given a week to do it, it's most likely going to be a much more complicated test that you have to finish. I know there are a few more questions in the chat, but I'm also just going to share my screen one last time. So just really quickly, so you guys have it, here is the QR code and for my profiles, and I work with people a ton on the technical prep for PE interviews and PE case studies. So feel free to reach out if you are keen to find out more about, or anything specific on the models, or you want to practice some, or you want to get your case study prep done early, and I can talk you through it. And also, if you are reaching out from this course and you reach out, I'm offering 10% off the case study package. But I'll keep going through the questions. What banking roles? I have a question from Samira. What banking roles do you recommend before transitioning to PE that will train you on finance? The obvious answer is to be on the investment banking side. So that's normally M&A, that's normally coverage groups within certain industries. It really depends on, so I did generalist M&A because there was no specific industry that I felt that I was really passionate about or I wanted to specialize in that early, but it's up to you. If you feel like you're really passionate about healthcare, for example, you could go specifically into healthcare investment banking, but you have to go in with the knowledge that if you're going to go into healthcare investment banking, you should enjoy and like healthcare enough that you want to go into healthcare PE afterwards rather than generalist PE, for example. You can still make the switch. It's just a little harder. The other roles that can be useful within investment banking could be leverage finance. So leverage finance is a team that comes up quite often because they just do much more of the working with private companies, funding those companies, providing debt, doing more LBO modeling. So it's just more skills on that side that you can pick up. I hope that answers your question. Okay, the next one is from Julianne. I'm a student in Montreal, Canada, wanting to break into PE. Already has 2 internships with a high chance full-time offer. My question, what is your opinion regarding starting full-time in PE without taking the investment banking path? So I would say I've worked with both kinds of students. I've also hired both people straight out of undergrad and people from banking. It really is just about PE funds don't offer as much training and getting you up to speed as banking does. So there's just one part of you that needs to be aware that to get yourself to an associate level, you have to learn a lot yourself, or you have to find somebody within the company, within the fund, who's invested in teaching you. I think that if you're going in as an analyst in a PE fund, you should also be aware whether that is the kind of fund where they promote from the analyst to an associate level, because quite few funds don't do that. So they only have a 2-year analyst level program, and then they expect you to figure out what you want to do next. So that would be just a thing that I will say you consider, and I'm happy to talk in more detail if you want to reach out. Okay, question from Eric. Options on restructuring. I think restructuring can be a great and super interesting team to be a part of in banking. The only thing I will say on restructuring is that it can be very cyclical. For example, if you did restructuring in 2021, there were very few funds who were looking for someone with a restructuring background. Okay, so that's just something that I will keep in mind. That said, if you do restructuring and you want to go and target a PE fund that mostly does, buys essentially what I call fixer-uppers, where they buy a business that they have to do a ton of fixing to and then sell, that's a really interesting job. And a lot of PE funds are very, very good at creating value that way. They would really value your skills if you come from restructuring, because you've been involved with doing that. You understand businesses that need to be fixed, and you are very quick probably at spotting those trends or spotting those metrics. So that's something that you should think about. Again, happy chat in more detail. Okay, Ashrek. Next question. Oh wait, I think I covered this one. Vinayak, do you have any typical resources to acquire model paper LBOs questions? So I think there are a couple. The obvious one is obviously to work with a coach in Leland or a coach somewhere else. You can normally also talk to other people at your firm and see if they've recruited for PE before, and they can share like the resources that they might have. Often, like, Wall Street Prep is one that has some online, and you can do some. I don't know how much those courses are. I think they cost between like a few $100 to a few $1,000, but you can like buy those and practice with that too. Okay, I think those are all the questions that I have. If there's anything else, I think we have a few minutes if anyone has any burning questions. Otherwise, we can wrap up. Vishal, you had one more?
Yeah, don't want to be that kid who always asks the
No,
last
go for it.
question in class. But so since I mentioned that, I'm coming from a background with more focus around technology and consulting. So my question is, there is a definite way of approaching the interview prep where I kind of solidify the foundations with like courses in accounting and finance, and then like build up on that on top of that foundation. But given the time crunch, and I'm in my second year of MBA, so I graduate in like 6 months. I have taken those basic foundation courses and I'm adding on more courses, but is there a lateral approach that you would recommend that I look at, where it's not like the traditional way, but more like a street smart way of getting through it? And I don't know, probably there could be none, but just wanted to get your sense on that.
Yeah. I think essentially the question you're asking me is that there's a way to accelerate prep in a shorter amount of time. And I think it's mostly really just around focusing your prep on things which are related to PE. For example, you could learn about accounting all day and you could spend all your time learning about specific like trial balances and things like that. That is irrelevant in PE. So there is no point in spending time learning it because it's not going to come up in a PE interview. So if your goal is to just like crush your PE interview, the best thing to do is target specifically that and target PE technical prep, which is actually very, very specific. So the kind of questions you're going to ask, the kind of models that you need to prep is very specific. So that's where you can like practice that. I would say if you wanted to do kind of much more long-term, hey, I'm aiming to recruit in a year or so, then yes, for sure, start with fundamentals of accounting and finance. But if you're in a time crunch, for example, I worked with someone about a year ago who had basically no finance knowledge, but was planning on recruiting in on cycle about a month later. And we spent the whole month just kind of crushing LBOs and doing technical questions, which are PE specific, because there just wasn't enough time for me to teach him trial balances and how very basic fundamental concepts of finance work. So it's just easier at that point to focus on things which are much more PE specific.
Thank you. That's certainly helpful. I appreciate it.
Of course. Alexandros, and I see you've got your hand up too.
Yeah, hey, I want to ask, since you went to LSE and you went to you started your career in London, what advice would you give for a PE recruiting specifically in London? Like, what's the difference in timeline? Generally, what are the differences I should be looking out for?
Yeah, of course. So I think the first thing that you have to be aware of is obviously the PE market in London and Europe is just a lot smaller. So just in terms of like the number of opportunities, there are fewer opportunities in London and Europe. So it's just much more competitive from that perspective. That said, I think, there are things that make you much more of an attractive candidate here. For example, if you have a European language that you're able to say, hey, I speak French, German, Spanish, Italian, whatever it is, so you can target a certain space. So that kind of counts towards you. The other thing I would say that here, there's a lot less on-cycle recruiting. For example, in the US, so I did Apax in New York, and in New York, when I was recruiting, we would be interviewing people on cycle at like 4 or 5 a.m. to get them before any other fund gets them. That does not happen in Europe. It's just like a very standard recruiting processes. But with those standard recruiting processes, they can be very, very long. So that's why I would keep in mind that if you are hoping to have a job in Europe in, I don't know, in June or September of next year, you should be recruiting now. And you should be recruiting through a combination of headhunters and direct outreach. But I think in Europe, more than in the US, there's much more reliance on headhunters, and way fewer funds take direct outreach than they do in the US. Okay, there's one more question in the chat from Jimmy. I'm currently a sophomore studying in finance. I'm super passionate about PE, but said to first find relevant skills through banking. As someone who doesn't have any background in banking, do you have any tips? I think to clarify, I feel like I would recommend banking just because it does offer training. That said, it's absolutely possible, and there's absolutely no concern with going directly into PE if that's what you know that you want to do. What I would say is, if you don't have any background in banking, you could still apply. If you're a sophomore, you could still apply after you graduate for an investment banking role. You could apply now for an investment banking internship or investment banking graduate role once you graduate. So it's not that you run out, there's still time to do it. Most of the PE hiring, like I mentioned, happens on cycle, which would be after you've already started working in banking. So you have by no means missed out on that. But the way that it would work is normally then on-cycle recruiting happens. It happens in the fall, and you join the PE fund in the US 2 years after you recruit. So it's just a different process. It is totally a personal decision whether you want to go straight from undergrad to PE. And I have friends and candidates and people I've worked with and coached who have done that very, very successfully. So it's totally possible to do it. You just get much more of a training in banking, and you are part of, the headhunter funnel. So it's a lot more structured in that situation. Okay, one more from Aaron. So I'm a sophomore with a small PE internship this summer in healthcare PE. How would you start leveraging this experience for larger opportunities without jumping to banking? I think if you are doing a PE internship in healthcare and you enjoy healthcare, the best way to leverage it would be to target healthcare specific funds. So you target funds which are focused on that, and you reach out after you finish your internship. Obviously, the easiest thing to do is to finish the internship, do really well at it, hopefully get good recommendations from your internship, and then reach out to healthcare funds and say, hey, I did this internship. I really enjoyed it. I learned a ton, and I know I want to do healthcare PE. I would love to chat. Okay. There are also headhunters you can reach out to who specifically cover healthcare PE, and you can build a relationship with them and figure out when you talk to them and how you talk to them is going to be really important, but you could have that conversation to make the switch. Okay. I think that was the last question. Again, I've left my details up on the screen. Feel free to reach out if you want to talk more about your specific situation, or if there's any other questions that you have. And thank you again for joining. I hope this was helpful.